Hello everyone, Ed Moya here, Senior Forex Instructor for Trading Advantage, and today is April 15th, 2013. This is your daily market recap. The markets are all about gold. Gold is the key story. Gold is lower once again. Gold has had consecutive $100 declining days. This is something that is unprecedented. If we see gold close out the month at these levels, this would be the largest decline that gold has seen since we've started trading this, and this is pretty historic. Gold has not really provided us with a tremendous weakness over the last decade. We've had consecutive years of consistent gold strength. But last year was the first year we did not make a new record high, and this year, as optimism came into the markets, the U.S. economy is better, the European debt crisis is contained, we started to see a little bit of gold weakness. Well, now gold is under pressure for an entirely different reason. While yes, China's GDP disappointment did hurt the commodities and commodity currencies, the key reason is central bank selling. If we do start to see central banks selling, that will destroy gold. In the 90s, post-Cold War, we saw gold finally stabilize and eventually have one of its strongest rallies in history, just off of the news that central banks were no longer selling. With a lot of the European countries selling 300 to 400 tons of gold a year, that was really keeping gold prices steady and low. And then once they stopped selling, gold took off. Well, now the story's about Cyprus, and if they do sell their holdings, it's going to be limited. It's not really going to move the markets, but it is opening the door to another concern. What if Spain starts selling? What if these other indebted countries are in a position where they have to unwind some of their holdings? Well, that is why we're seeing this tremendous reaction in gold. So traders should be very cautious, because you might be used to trading gold on a regular basis, but now you're starting to see $100 moves, $20 pullbacks, $50 pullbacks, and this is something that if it's too volatile, if it's too crazy, it's just like when you're in the ocean. If the waves are getting too rough, let's say you're in Hawaii, and then all of a sudden you're not really feeling too comfortable, just get out of the water. Just wait until the market is a little bit more friendlier for you, or trade smaller. You can always trade the mini gold contract if you're not used to this type of volatility. So please remember, don't fight this trend. Eventually we'll see it stabilize. Eventually there will be valid reasons for gold to stabilize and potentially rally. But right now, selling is tremendously defined in this move. You're going to see potentially $50 to $70 pullbacks. Well, you may want to look to sell into those. So be cautious, but more importantly, stay on top of the key central bank discussions. Central bank policy is going to be so important, especially in the next couple of years of trading. So it really affects the currency markets, but you'll also see it affect these commodities, and you'll definitely see some strong opportunities emerge over the next couple of years, just based off of what central banks are doing. So that is your Currency Day recap. Look forward to seeing you guys in the trading room, and everyone, have a good day, and don't forget to do your taxes.